Today, with the major stock indices across the North and the South America closing in the green. Investors showed confidence in economic stability, corporate earning and broader market resilience, leading to widespread gains across the key indices. In the United States, the Dow Jones Industrial Average surged 222.64 points to reach 0.52%, continuing its steady climb as investors reacted positively to the economic data and corporate performances. The S&P 500, a key benchmark for the broader market, gained 31.68 points, that is 0.55% rise, reflecting the strong demand for the large cap stocks. Meanwhile, the Nasdaq Composite, which tracks the tech-heavy stocks, saw an even stronger increase of 126.97 points, that is a 0.70% rise, suggesting continued investor enthusiasm for the technology sector. The Russell 2000, which represents small cap stock, rose by 8.93 points, that is 0.43%, indicating the risk appetite extended beyond just the blue chip stocks. A notable market movement was seen in the VIX index, often referred to as the fear gauge, which fell 6.03%, signaling a decline in the market volatility and uncertainty. This suggests that investors are increasingly optimistic about the economic stability and the upcoming market conditions. In Canada, both the S&P TSX Composite and the S&P TSX 60 posted solid gains, rising 0.71% and 0.70% respectively. This upward movement aligns with the broader North American market rally as the commodities, financial and energy stock in Canada continue to perform well. The South American markets had also have a strong day, with Brazil's Bovespa index leading the charge with a massive 1,677.08 point jump, that is a 1.36% rise. The significant gain suggests renewed confidence in Brazil's economic outlook, potentially fueled by positive domestic economic indicators or the global commodity demand. Meanwhile, Chile's S&P IPSA and Mexico's S&P BMV IPC saw smaller but steady gains of 0.09% and 0.04% respectively. Overall, today's market movement highlights growing investor optimism as indices across different regions posted gains. The drop in volatility, coupled with strength across technological, financial and energy sectors, indicate a positive outlook for the near term. Traders will likely keep a close watch on upcoming economic reports, central bank policies and geopolitical developments to gauge whether this bullish sentiment can sustain itself in the coming weeks. Commodity markets experienced mixed movements today, with energy prices facing declines while metal and agricultural commodity recorded modest gain. WTI crude oil and Brent crude oil both saw a drop of 0.61% and 0.59% respectively, with WTI settling at $66.63 and Brent at $69.47. The decline in crude oil prices may reflect concern over the global demand, potential oversupply, and geopolitical factors influencing the market sentiments. On the other hand, the natural gas surged by an impressive 5.14%, reaching $4.03, marking a sharp decline with the increasing demand and possibly due to the colder weather condition or supply constraint. In the metal sector, gold inched 0.13 to reach $2,917.80, continuing its slow but steady rise as investors hedge against inflation and economic uncertainty. Silver also posted gains, rising 0.35% to reach $32 as demands for the industrial metal remain stable. Agricultural commodity remained relatively flat, with soybeans ticking up 0.05 to reach $10. The slight increase could be attributed to the seasonal factors or shift in the global supply and demand. Also, overall, while the energy market showed weakness, the Strong performance in the natural gas, gold, and silver suggests that investors are diversifying their position in response to the shifting economic conditions. Market participants will be closely watching future developments, including the OPEC decisions, Federal Reserve policies, and broader macroeconomic indicators to gauge the direction of the commodity prices in the coming week.